Welcome to Crypto Simulation Theory. I'm the Gaussian Snake. Tonight I'm going to talk about the storm before the surge. And I'll start right off by looking at rate cuts, and those are coming up in just a few days. This is the big news that everybody's waiting for. And so if you look at the 9/18 meeting, which is just 3 days from now, you can see that the CME group, or Chicago Mercantile Exchange Group, they're forecasting a 60% chance, roughly, we'll say 59%, close enough, of a 50 basis point rate cut. And that's not good, right? We don't want to see aggressive cuts coming that that quickly, but it could happen. And in fact, their entire rate cut schedule is very aggressive, putting a probable rate cut floor sometime in the half two of 2025. And should this aggressive schedule play out the way that the CME group at least thinks it's going to, this is going to be very tragic for Bitcoin. So I want to point out kind of what this would involve for Bitcoin. I've drawn some, red zones in here. These are modified red zones. The lower red zone now goes from 42,000 to 51,000. The first target red zone goes from 90,000 to 130,000, and this upper one goes from about 160 to 200K. So one thing that worries me is if the Fed group, if the CME group is correct, which they rarely are, but we just still consider that as a possibility. What we're likely to see is we're still likely to see this storm before the surge. Okay, so I don't think this is going to change at all. I can't tell you exactly where this would go, but I think we'd probably be stuck in the mud until maybe around mid-October. Okay, and then what happens after that? Sorry, I thought I thought I grabbed the path tool. Let's grab the path tool um, right here. What could happen after that is we get a very massive bull run that basically ends in quarter 1 of 2025 or even quarter 4 of this year. It's possible. If the CME group forecast is right, then we're likely to see a very aggressive pump straight into a blow off top. Now, it could come maybe in March, I don't know exactly where. And then we would likely see as the rate cuts get more aggressive, and this is being even generous, like saying it would even go this far. Like we could end even in quarter 4 of this year. We could see a bear market that just drags us down into 2026 and beyond, um, to prices like around 25K, I think would be probably where I think a bottom would occur. And this is another red zone of mine. So this is a possibility. We have to consider it. This is still a left translated cycle if something like this occurs. Um, it's not necessarily my base case, but since the Fed rate cut forecast is so aggressive, this is likely, what would happen is just push inflation straight back into the picture with the Fed cutting this aggressively. Okay. This is not really the situation that I want to see, but it is one that we do need to consider. So that's why, I'm putting it there. And a more reasonable situation would be that we have the storm and then the surge, all the way into, again, like somewhere probably in quarter 1. It's hard to say exactly where. And we hit a price between 90 and 130K. And again, I don't know exactly where that's going to happen, how that's going to happen. I imagine there could probably be some resistance around 100K, but let's just say we kind of chop around in this zone for a while, and then move up towards the end of the year. We would go much higher than this target because of logarithmic regression. Okay, I have no clue what's going to happen next year. I don't even want to pretend like I do. But let's just focus on this first leg up. If the first leg up starts to chop in the 90 to $130,000 range, which I think is still a likely situation, that's only going to happen in mind if the Fed is not aggressive with rate cuts. If they give us a 25 basis point cut in September, a 25 basis point cut in November, maybe they even hold rates steady in December, or at the 25 basis point. Like, I feel like it has to be a slow rate of change to enable some kind of bullishness. And even with 3 rate cuts, right, we could still wind up in a recession. Okay, there's a lot of instances in the stock market where that's happened, so we do have to watch out for that. But the one thing you can always count on, well, not always, but I think you can probably count on this time, is that if we do end up in a recession, when we end up in a recession, you probably won't know that it's coming because price will be so elevated and everything will just be green. Okay. Recessions generally don't occur when everybody's like watching for it, like right now. Um, some things that are still bullish right now, like we have a green concave up Gaussian channel on the 2-week time frame, which is quite hard to accomplish. We still have a bull market support band on the Gunnar EMA. We have a bull, we had a bullish cross back here in May of 2023. So like about a year and a half ago. And bearish and bullish crosses on a 2-week time frame are hard to achieve as well. And even if we did dip into this red zone, it still would not make a bearish cross here. Just shrink the bull market support band a little bit. And I think we just come right back up into it in mid-October. So regardless of the outcome, right? And let me make this clear, regardless of whether Bitcoin is just gets up into this first green zone, or if it just goes on this like massive parabolic run, I still think quarter 4 is going to be bullish. Like I'm willing to bet the as Ben Cowan would say, bet the family farm on it, right? So I am willing to do that for quarter 4. I see absolutely no reason to be bearish right now, other than maybe just a little bit short term. Okay, I've marked this up. Let me erase these drawings so that I can explain kind of like where this is coming from. This is the 2-week reverse Chandy price momentum oscillator. And it pretty much it's kind of like RSI, but think of it as the RSI, or the rate of change of price momentum. So like the return on your investment. The ROI in this cycle peaked in, at least this rate of change peaked almost at a level of 100 in February of 2024. And I even said around the time that I discovered this indicator that this was likely going to just come straight down, and that's exactly what's happened. Because if you look at the past history, every time we've gotten these levels above 85, um, it's spelled pretty much a pretty aggressive leg down. So like most of those legs down, except one, have occurred, or except two, have occurred during bear markets. The first instance was in 2013, where we hit these levels, chopped around a little bit at higher levels, and then went up for our secondary top in November, and the cycle was over. 2017 was just, we rode this whole thing up and then dropped. And 2019 was an anomaly where we put in this double bottom on another bull run, only achieved a level of about 70 on price momentum, but still dumped all the way down to around -41, put in a double bottom on the COVID drop, and then had our bull market. You can see that we dropped again in 2021, heading into November. November was a very brief peak, head and shoulders, and just straight down we went. So unless you're in a bear market, you're generally not going to hit levels below -50. But if I draw a horizontal line, you can see that there aren't too many times outside of bear markets, right, that we've hit levels below, like, let's just call it -27. The only times that it's happened has been here in 2019 and 2020. So that was the first instance of it happened in December 2019. The second instance of it happened in March of 2020, and then we went on a bull run. So, and that was a fairly long bull run. So there's a lot of unknowns here, like, and we did have a recession here. There was a recession. So I think we're about to see a nosedive, like to, I don't know, not as low as a bear market, but maybe here. And I think what you could see form, and this would be pretty bullish if it did, is some kind of inverse head and shoulders, like, and just kind of taking off and into putting in some kind of, lower high maybe. And it'd be nice to see sort of a change in trend, and then maybe we have a little bit of weakness, and then we come up some more, a little bit of weakness, that would be nice, right? And then it's hard to say exactly where we would top or how this would even go, right? It's impossible for me to picture this, but at some point we're going to top and then start to work our way down, right? And that doesn't mean price is going down. Something kind of like this would be, maybe stretched out a little bit, would be slightly ideal. You'd have time for the signal line to flip green again, and then to flip red later on in the year, and you can still put in new highs even when your signal line is red. I mean, like, see how we went to put in a new high in November, flip the signal line green for a little while. So this would be kind of ideal. What would be dangerous for price momentum, this is not price, this is just a momentum, um, would be, if we come down, let's just say like we come down here, like I've been sort of forecasting we're going to do, and then we pump really aggressively, like, into, like, let's say, I'm not even sure, like February. Again, I'm kind of timing that, March is generally not a great month. So let's say February, March timeframe, we could start to see this roll over. Or maybe you get like a dead cat bounce here and you get another head and shoulders, and then just straight down into the depths of a bear or something. Okay. The reason why this particular formation concerns me, this is the situation if the CME group is right and the Fed's going to be really aggressively cutting rates, there's a reason they're doing that. And I think that reason is the economy is broken and they need to stimulate it. That would form a massive head and shoulders pattern never seen before on Bitcoin on the 2-week price momentum time frame. And that would spell an early end to our bull market. And this is what I call the left translated cycle. And this is not, you can see it's a massive head and shoulders. So it's probably going to spell an extended period of depressed price action for Bitcoin. And the bear market could last much longer than what we're accustomed to. We're accustomed to like a 1-year bear market. This bear market could go for 2 years. So, or 18 months or whatever. Like that is a possibility. I don't think it's the base case that I have right now, but why should I be thinking about a recession when I don't think one is like happening at the moment? But it'd be foolish to not at least consider this. Every time, and plus every time we've gotten to these high levels, the market didn't really have much life left to it. So the only exception, again, being 2019, we didn't quite get above 80, but we did get to some pretty high levels, and the market still had over a year of bull market left. About a year left of a price momentum bull market, but it did put in a higher high. How would you even put in a higher high here? I mean, this is the highest this thing's ever gone outside of 2013 and 2011. You probably won't, right? And we don't get to levels this high often, as you've seen. So I have to think, regardless of the outcome, we're probably going to have a lower high on the price momentum oscillator. And the question is, does this is there a way to avoid is there a way to avoid a massive head and shoulders pattern? Whether that starts in Q2 of 2025 or even Q1 of 2025, we don't know how aggressive the leg up is going to be. This is something that we do need to watch out. There's a lot of indicators on here, like a lot of lines. So I apologize for that. This is the weekly time frame for Bitcoin. I'll see if I can blow it up. You can see we've been kind of tagging the upper boundary of the weekly Gaussian channel. We had a bearish cross on our weekly bull market support band, which is now a bear market resistance band. Anytime you go and cross, the red goes above the green. These are exponential moving averages. That now becomes resistance until proven otherwise. And you can see that on the weekly, we got right up to the lower boundary of the bear market resistance band, but we're having a little bit of trouble there. Now, this yellow line is the 20-week whole moving average, and that is acting as support right now. And the question is, can this continue to act as support, as we go through the week? And yeah, I'm not sure if it can or it can't. I don't know. My base case is that it won't, but maybe it does. Maybe I get surprised. I think this is going to be looked back on as a lower high and a downtrend. I think we're slicing through the Gaussian channel, and I even think we're going to make it to the median line. Okay, and maybe even below it. We may even go below it. So I think we're slicing through it. That's my base case for now. Now there is something that I want to remind you of, and I'll keep reminding you of this until it happens. Is that every time there has been a death cross of the 50-week and the 100-week whole moving average, this has always been followed by a pump. Every single time in Bitcoin's history, this has happened. When these two have crossed, there's been a pump. That pump sometimes came with the death cross, it came slightly before it or after it. Now, you can see that we did pump into our death cross. This is not much of a pump. I am anticipating a more dramatic pump coming, but like I told you, I don't think it's coming until probably, if I had to guess, October. Okay, I think Q4 October, that time frame is when we're going to see things start to really turn around. I think we are likely to penetrate the Gaussian channel on the weekly time frame and to flip this 20-week HMA back to resistance. So I think that rejection may happen even as early as this week. Again, that's my theory. Who knows exactly what will happen? And so that takes Bitcoin down into my red zone, and my red zone, as you can see, is well within the channel. I'm not really often going below the weekly time frame unless I have a reason to. But if you do look on the 5-day time frame, we've already entered into the 5-day Gaussian channel, and the bear market resistance band on the 5 days is alive and well. Okay, like we've just been getting rejected and rejected. This is a different Gaussian channel, right, than the weekly. So, but just the fact that we've sliced through it does raise the odds that that's likely to happen because that's momentum, right? That's 5-day momentum. Granted, it's like 80. What is 5 divided by 7? Like five or yes, 7 goes into 5 7 times. So it's like we'll say like like a 71% of the time frame of the weekly, roughly. Okay, so like a 71% time frame, but that's still momentum. The momentum is down. This looks like a downtrend. It is a broadening wedge, which is a bullish formation, but it's not bullish until it becomes bullish, right? Until it starts to actually make a move. And so every time we've tried to go above the 20-week HMA, we've just been rejected. And I don't think this time is going to be any different. What I'm not really seeing with Bitcoin is volume, right? Like I'm not seeing volume. Do you see volume? I don't see volume. Let's look at the volume momentum. Why call volume momentum so we can get an idea kind of what's going on. Yes, we did have a blue week, which is great. But look at all these orange weeks. We have another orange week forming, and that blue week was nothing that impressive compared to the blue weeks we had in quarter three and quarter one, quarter four of 2023 and quarter one of this year. Much more impressive, right? This is all sell volume, so not impressed. If we look at the bull bear power trend, you'll notice we've even dipped down into here and the bulls are no longer in control of the market. This is a downtrend of bull strength. So everything is pointing to a period of weakness coming. That period could extend beyond mid-October. I'm not psychic. I don't know. But my theory is it will last till about at the latest like mid-October. And then we'll start to see Bitcoin really turn around. So just brace yourself for downside volatility. This market is cruel and it will mess with it will mess with you. It will screw with your emotions. It will make you feel like you've made a mistake by being in this market, but that's just what it's designed to do. It's designed to mentally wreck. Something you should also be aware of is that even if Bitcoin does, drop down to whatever, 42 to 51K, somewhere in there, Bitcoin dominance is likely to keep going up. And so I've drawn a green zone, which differs from what I've said in the past. I'm on record saying that I thought the highest Bitcoin dominance could go was between 58 and 60%. That could still turn out to be right, but we're already at 58.06%. So based on past areas of horizontal, resistance, or past areas of horizontal support, which I believe now will flip to resistance, I'm sort of eyeing a topping target for Bitcoin dominance between, well, we're already in the green zone, so between like roughly 57.28, so that's already invalidated, up to, 64%. I don't think Bitcoin dominance is going to make it to 64%, but I think 60% is a pretty reasonable target. I think that it could make it there. So a more realistic green zone, if I wanted to shrink this down, would put this closer to like 60%. Okay. That's more realistic and more in line with what I think will happen. But I think Bitcoin dominance is in its topping process. You can see the Gaussian channel is already starting to widen. It's concave down. I think it's in its last days. I really do. And I think we could see dominance top as soon as this month, potentially. Um, More likely, I think it's going to take through October to do that, but I think dominance is in a topping process. And what sort of like is confluent with that is ETH Bitcoin. So if you look at ETH Bitcoin, hopefully my red zone loads. I've had this red zone on the channel forever. We're in the red zone. We are at 0.03878. We've been waiting forever for this to happen. And the Gaussian channel is red, concave down. It's starting to kind of flatten out here. and widen. So I am thinking that Bitcoin is also going to find its bottom in quarter four. So could find it as soon as this week. I don't think that's going to happen, but it could. Maybe October. Okay, so around the same time Bitcoin dominance is going to find its top. And that is going to mark a major transition point in the market away from Bitcoin to altcoins and Ethereum. And I think 2024 will generally be remembered as a Bitcoin year, but I just feel like 2025 is going to be known as an altcoin year. And again, I'm not saying that I think the bull run is going to end in December. I really don't. That's not my base case. I think it's worth considering again if price gets too out of hand, but I think the bull run is going to surprise us and go on a lot longer. And the reason why I think that the reason why I think the majority of 2025 could contain the bull run in line with previous cycles, despite the recession risk, is because I think the Fed is going to be slow to cut rates, slower than what the CME group thinks. I don't think they're going to cut rates as aggressively as people think they are. And because of that, because I don't believe that they are, because of inflation, mainly the risk of it coming back, they don't want to repeat the 1970s. Okay. I honestly think that the most likely path is that we're going to get a, I don't know what's going to happen with this first rate cut. I really don't. A 50 basis point rate cut could happen. The Fed could just do that and then hold things steady for a little while. So that would cause a pretty major drop, I think initially, but then things might level out for a little while. I think this rate cut cycle is going to take longer than what people expect just because of inflation. I just think the Fed is way too trigger shy to pull the trigger on getting aggressive with rate cuts. The CME group doesn't agree with me. The CME group thinks that the rate cut floor is going to come sometime in quarter three of next year. And I mean, I'm open minded to that idea, but nobody knows, right? All I can do is just look at the data and say it doesn't make sense for the Fed to come in right now and cut really aggressively. But there's also a danger to them not cutting aggressively enough. If they don't cut aggressively enough, then the economy just, maybe the market rolls over and the economy starts to deteriorate. So that's not what I'm seeing. So I don't really know about what's going to happen in 3 days. I've called for 25 basis points. That's been my prediction. I don't think 50 basis points is going to be what they do, but I really don't know. And it's a waste of time for me to try to guess. But how do you position yourself in this kind of situation? Well, I don't think you want to be and this and by the way, nothing in this video is financial advice. I don't think you want to be like entirely out of the market, but you probably do want to have some kind of cash or stablecoin position. Let's take a look at USDT dominance, which is the stablecoin dominance in the market right now. And you're going to see something here that is kind of another reason why I still feel really bullish heading into quarter four. So, what do you notice? Stablecoin dominance has been in the bear market. Okay. It's been in a bear market since December of 2022. This was its first bear flag that took it on. It's a very long bear flag that took it into October of 2023. When that bear flag broke, okay, this is you can almost think of this as like a distribution phase. When that bear flag broke, that marked the beginning of the bear market for Tether dominance, and really any other stable coin. And then it had a little bear market rally in January that went up to this like trend line of about 6.67%, and then there was just a huge dump. That dump corresponded to Bitcoin putting in a new all-time high. And then we've been pumping ever since, but I think this is just another rising wedge that's going to just break to the downside. Look where we're at. We're at the median line of a red Gaussian channel that's concave down. We do have a bullish cross, so that is something to keep in mind. But I don't think this is going to hold. I think we were already gotten rejected here once. You knock on the door and you don't get in, you're going to come down. I think we're going to get another drop. Now, the big question mark is what happens after that? And that's where I do get worried. I do start to worry that stablecoin dominance is going to find some kind of major bottom, which would mean that Bitcoin would find some kind of major top. So this left translated cycle idea is not totally unfounded, and you can almost kind of see this bear market continuing. Now, what I'd like to see for the bear market for Tether dominance, and maybe this is what happens again, We have absolutely no way to know what the future holds. I mean, what I'd like to see is that this comes down, um, maybe into, let's say, February, March timeframe. Get a little bit of a recovery. Gaussian channel will maybe be more down. I don't know, and then we get another rejection. I would love to see just a major bear market take place for tether dominance. And then maybe what you get at that point is like an inverse head and shoulders that takes stablecoins back up during a recession later on in the year. So this is the situation that I would like to see, and I think it's possible, right? That we could see some kind of downtrend line for stablecoin dominance, that really takes us deep into 2025. And that means our bull market for Bitcoin could last all the way to quarter 4 of 2025. And maybe Bitcoin puts in a really nice blow off top. That is my base case. Okay. But we need to be prepared for anything. But that's my base case, more or less what I drew right there for stablecoin dominance. Okay. So, again, in conclusion, I'm still very bullish on quarter 4. I don't know if the bull market will start until maybe the middle of October. I think it's going to take a little longer to roll over to the positive. I think there's going to be a storm before the surge, but I'm calling it a surge because I think, wow, it's going to knock your socks off, and we're going to enter into some good times. I think if my theory plays out, 2025 is going to be a very, very good year for us. Okay, there's no reason to be bearish right now. There is a reason to be short-term bearish, but in my mind, there's no reason to be long-term bearish. I think that sometime between the end of this week and on the middle of October, the market's going to turn around to the positive, and you're going to be glad that you didn't tune out and leave like so many other people did. Most retail probably won't even start to show up until the end of the year. You've been in much longer than that, and so that's good on you. Thanks for joining me in crypto simulation theory. Thanks for jumping into the simulation with me, this money making simulation of ours. I am the Gaussian Snake. And I would encourage you to sign up for my free Telegram group, the Snake Pit. We've got a really great group of people there, and we'd love to have you join our community. And yeah, that's about it. Like, subscribe, and comment if you enjoyed the content. And let me know what you think, by the way. Do you agree with my theories, or do you think that I'm totally off base? I'd love to hear from you. Until next time,